the euro at a 20-year low, and you know what? There seems to be no support. The way is down.
Yeah, certainly risks are towards moving lower. The key data in the very near term will be the PMI data that comes out today for Eurozone. We'll have some precursors for that in terms of France and Germany PMI data to give an idea of what it will be. But obviously, if it comes out signalling contractions, that just adds to the euro's woes, and you're more likely to see the euro push even lower. It does have a potential near-term support around 98.50 because there's about 2 billion worth of options expiring on Friday. Now, having said that, because it's Friday in the option world, that's quite a long time to actually hedge those positions. So there'll be some support, but if the selling really picks up, they won't find it too hard. So near-term risks are certainly to the downside for the euro.
It's not just a headache for the euro; it's also for the pound. No matter what the BOE does, no matter how he hikes rates, there's no way it's going to find support either.
Yeah, the BOE's got, the Bank of England said there's several problems. Citigroup came out yesterday and said it sees UK inflation peaking at 18%. The Bank of England previously said they saw it at 13.3%. But obviously, even the Bank of England's targets may be revised higher after inflation beat quite easily last time, and particularly core inflation really rose. So pressure on the Bank of England to raise rates, and in the meantime, when it doesn't, real rates return negative. But also, it's got other problems. The economy always was in a recession. The last quarter, was in negative growth. UK consumer confidence is at record low. And even more, what's interesting, the Conservative election you had between Liz Truss and Rishi Sunak. Liz Truss is a favourite to win it, and if she wins it, she has indicated she may, not definite, but she may play with a BOE mandate and turn it to more money supply. Investors tend to like leaders staying clear of central banks, leaving them independent. So any idea that she may end up actually changing mandate may not be positive for sterling and just add to its woe.
Yes, investors want clarity. Let's take a look at where we are in terms of Jackson Hole. That clarity isn't likely to come. How will it play out for the dollar? Because in the end, it is about the strong dollar that's causing all this headache for the other currencies.
Yeah, certainly. The dollar is certainly the key driver at the moment. I think what the expectations are for Jackson Hole is that Fed Chair Powell comes in. He comes in very hawkish because, as I said, people question the minutes. What do they mean, not mean? I think he comes in and goes, let's just make this really clear where we stand. We're going to do whatever is needed to keep inflation under control. We will raise rates. And more like, it wouldn't be surprising if he says we're not going to cut rates next year. And the market's already beginning to reprice for that. The key thing, though, going forward is what's his statement? How does it feed into the dot plot? If you look at the dot plot for the most recent dot plot, it was basically 3.75 was the median. It was really evenly split either side of that. You look at someone like Fed Chair Evans, Chicago President Evans, who's on the more dovish side. He's saying he actually sees it going to 3.75 to 4% next year. Now, assuming he's one or more doves, that would mean actually his dot would rise, taking the median with it. So actually, there's a good chance that dot plot in September for 2020 next year says that the median forecast rate actually goes higher, which is against what the market's expecting. The market's supposed to revise its expectations, and that means rates going higher, and it certainly means dollar going higher with it.